So Tesla just reported third quarter earnings. They were very, very good. They beat a lot on earnings per share and profit margin. So we're going to dive into that, but you can see they were down 2% by the end of the day, but in after hours, they're up 11.5% as of the recording of this video. So very, very, very good. That's what you're looking for. And I think it's a tiny bit unexpected. Let's look at it. So revenue is actually slightly below what was analysts were expecting, although it's still over year, because last year they were at 23.4. So it's good you got increasing revenue. That's about 8% year over year, which isn't incredible, but this earning per share is awesome. 72 cents versus 60 cents expected. That's roughly what? 18, just mental math, 20% higher than expected. So that's very, very good. That's what you're looking for. Free cash flow was up as well, and that's obviously great. Gross margin figure came in at 19.8, much higher than 16.8 that was expected. So there's a few ways companies can grow, right? I'm sure most of you know this, but just rehash. You sell more volume, right? Or you get more efficient in what you're selling. And it seems like that's what they're doing. They're getting more efficient. They're cutting costs. I know there was some layoffs, right, in Tesla. I'm not sure if that directly attributed to it or not. I think a lot of that was in the battery one. I don't know. I'm not 100% sure. I'm actually not a Tesla investor. However, I do follow the company at least relatively closely. I don't dislike the company at all. I think it actually is very well. It's just capital is finite, right? There's only so many stocks we can invest in, and Tesla just isn't one I'm holding at the moment. However, I almost did. I almost bought in around 190-ish. So, but anyways, that's not for today. If you can keep, so it seems like Tesla's getting way more efficient, right? They are selling a bit more, like 7%, but you probably, that's not the key reason you're holding Teslas, because they're selling 7% more year over year in revenue. There's probably two main reasons. Well, probably the main reason is robotaxi. And that's what I would be looking at. If I'm an investor, this is great, right? This is good news. The company's making more money. They have more free cash flow. They're being more efficient. That is great, right? But I'm assuming most of you are holding today probably for robotaxi. You think that's the future. You think that's good. Maybe not. Maybe not. Maybe some of you watching this aren't, but I'm assuming the vast majority of you are. And so that's primarily what I would be looking for. But however, this isn't a bad thing, right? The company being more efficient, doing more with what they're, given, right? And if you can maintain anything near this, you don't even need to maintain this, but if you can get near this again and consistently maintain that, that's just free money, right? Just being more efficient with that sort of thing. Yeah, Tesla shares were up nearly 11% in after hours trade. We delivered strong results in Q3 with growth in vehicle deliveries. This is true. Record third quarter volumes. Yep, more affordable models. That's the thing too. Yada, yada, yada. Yeah, they delivered 460,893, so 6.4 quarter over quarter. That's pretty good. I wonder what it is year over year, but probably roughly the same. So this is important too. Tesla said it expects vehicle deliveries to achieve slight growth in 2024, which is true. They weren't guiding super well for this year anyways. Elon Musk added during conference call that 20-30% growth next year is possible. Okay. So you're kind of happy about that as well. That probably is contributing a lot too. Yeah, 20 to 30% growth next year would actually be very, very good, right? Because you just want to keep selling more, and then that's still robotaxi is still not implemented yet. So I mean, like I said, robotaxi is the main thing I would be looking forward to as an investor, hoping they can do well with that. But this is still really good news because the stock you're owning is selling more. They're more efficient. They're better managing, the supply chain, whatever it may be. I'm not sure exactly. They didn't say why that profit margin's up 3%. I mean, and that was 3% over expected, right? So that's not even necessarily year over year. Maybe they expected it to get more. I don't necessarily have that information in this article, but I'm assuming that, right? So, but I wouldn't worry about the revenue at all, and it seems like no one is. I would be most hyped about the Musk saying 20 to 30% growth next year is possible. Now, he didn't say it's certainty, but possible is really good. And the EP earnings per share being that much higher too. Really, really, really good news. So anyways, I'm not going to drone on too much longer. Great day for Tesla shareholders. I hope it continues. Seems to be a great run company. So, and obviously as an investor, you're probably looking forward to that robotaxi as well. I know I've said that a few times. But anyways, if you enjoyed this video, I'd appreciate it if you left a like, subscribe. I'm new and all that, so I would just appreciate a lot. But anyways, I'll catch you all later. See ya.